This is the swing failure pattern strategy explained. Now, the swing failure pattern strategy is one of my favorites. It's one of the main trading strategies I use to profit in the markets. Now, the great thing about this strategy is that it's real smart money concepts. Have you ever entered a long position, put your stop loss below the previous swing low, and then get stopped out just for price to continue going in the way that you expected? I'm sure many of you have experienced this at some point. The goal with this strategy is to enter where retail is putting their stop loss. And if you like the easy algo indicators, be sure to click the first link in the description below. It will help you a ton, especially when using this strategy. Now, as you can see, when you're entering trades using this strategy, the risk to reward is oftentimes very, very large, right? This most recent trade was a 13, almost a 14 risk to reward, and I'm still holding a portion of it. So this could be, a 20, 30, 40, 50 risk to reward depending on where Bitcoin goes from here. All right, so a swing failure pattern is a failure of a key point or level, right? So that could be a support or resistance level, it could be a key fib level, or it could be a candlestick wick, right? These are my favorite types of swing failure patterns, especially when there's more confluence, like a key fib level in this general vicinity or a higher time frame resistance level. So I'm going to break down exactly how to spot a key point or level to take these trades at in the first place. All right, so to start using the strategy, like any other trading strategy, you want to go to a higher time frame. All right, the reason for this is because you want to have a bias, right? What is the market telling you on a higher time frame? I can see that in this case, the market is in a downtrend. And the reason I know that is because we're seeing higher highs and higher lows, right? We haven't broken this downtrend market structure, right? We tried to a few times, but we kept making lower highs and lower lows. That means that short positions are valid for this strategy. I will not be looking for any long positions because I understand that the environment on a higher time frame is telling me that price is going to go down. Now, I like to confirm my bias on the 4-hour time frame. Now, there are many other terms for a swing failure. Another popular term for a swing failure is a fail and reclaim, where price could be ranging, right? And then you lose the lows and reclaim, right? For a long position on the reclaim. So that would technically be a swing failure of the range lows, right? Because you had lost the range lows and then you're entering on the reclaim. Another term you may have heard is a false breakout or a deviation, right? So let's say price is at a resistance level, right? Going up, it breaks out and then immediately dumps back down into that range. That would be a false breakout or a swing failure of the range highs. Now, like I said, my favorite swing failures are taking a swing fail of a wick. Now, in this particular trade, the reason I was looking for a swing failure of this wick is because number one, we had already confirmed the environment. We are in a downtrend and that shorts are valid. Keep in mind, we are in a downtrend until we break the previous high. And by break, I mean a candle close above. So this right here, right? This right here is not a break of structure to the upside because we didn't close above that high. Now, the reason I was looking at this candlestick wick as opposed to this one right here, or this one right here, or this one right here, or this one right here, is because this is the most prominent wick that I see. Right? This is the most prominent wick. We saw a sharp move down from this level, telling me that there are sellers in this area. Now, I know because we had a sharp move down from this prominent high that there were short sellers that went short around here, and they're going to put their stop loss right above this wick. This is what a majority of you guys do, a majority of retail, right? They're going to enter somewhere around here and put their stop loss above the swing high. Now, price is going to come back up to this level. Our price is going to come back up to this level, stop everyone out that had their stop losses here, or fill the short sellers that didn't get filled over here. And that is where we enter with the smart money. Now, it will take a little bit to get the hang of finding these key points and levels to swing fail. Like I said, it's not just any candlestick wick, but in this case, we had a very prominent swing high. You can see we also had one up here, so this could be another potential swing fail. But I consider this a key level because of a few reasons, right? The first one is that we had a strong move down from this level. The second reason is because we have a 4-hour resistance in this general vicinity, giving me more confluence that if price comes up to swing fail this candlestick wick, we'll see some sort of reaction. And because we had a key Fibonacci retracement level, right? We also had a golden pocket right above this candlestick wick. So price is going to come up, grab all the liquidity from this candlestick wick, tag that 4-hour resistance, tag that golden pocket, and then come down. So if you wanted to set a limit at the 618, you could have as well, which brings me to my next topic of how to actually enter the trades. So there's a few ways to go about it, right? The first way you can enter a trade is by setting a limit order. So you'd simply set a limit order at the 618 like I showed, the 4-hour resistance, or even at this wick. Now that is more risk on because you don't have confirmation that price is going to go back below that level. For all you know, the candle could close above this level and continue going higher, and then you get stopped out, which is why I recommend trading based off of a market order as price is going through that level. This is where you want to pull up a split screen, or if you want, just go to a lower time frame with those higher time frame support and resistance levels toggled on easy algo for that entry. And we're going to enter a market order as price is going through this level that we had marked out. So to get that perfect entry, I like to go to a lower time frame, such as a 1 to 5 minute time frame, and take these easy algo buy and sell signals as price is going through that level for the most optimal entry. Another thing to note is the easy oscillator. I want to make sure that the easy oscillator is at or near that oversold zone on a lower time frame for that entry, and then you can simply hold the trade as price dumps. So that's a great confirmation when you're entering a trade. Make sure you're getting an easy algo buy or sell signal going through that key level that you're looking at. The reason this works so well is that if price just pumps through this level and let's say closes above and then keeps going higher, you'll avoid the trade completely, and you'll only enter if you get that sell signal telling you that this is a valid swing failure pattern and that price will go down from here. Now that you understand how swing failures work, let's look at a few live examples. You can see that the same thing that had just happened on Bitcoin actually happened around a week ago on a higher time frame. We have these bearish candles, right? The most prominent high telling us that there are sellers in this area. Price comes back up to this level, stops out all of the traders that had their stop loss above that swing high, and fills the short sellers before coming back down. And you can see that the risk to reward are just huge on these trades. And again, we also had a golden pocket confluence, right? From the swing high to the swing low, we had a golden pocket confluence. So when you see these type of candlestick wicks overlapping a golden pocket, it tells you that there is so much selling pressure in this area that you should be looking to take a short position. Again, look at the oscillator. We're on a little bit of a higher time frame here, but the same concepts apply, right? We have that sell dot in the overbought zone with that reversal signal. So if you want to wait for the most amount of confirmation, you could enter when that reversal signal is confirmed, place your stop loss above that swing high, and then target the higher time frame easy algo support and resistance levels as take profits. I'm using the 4-hour levels like I had already mentioned. Going on to a little bit of a lower time frame, you can see we have a prominent high right here that I'll be looking to take a swing failure at. Prominent high right here. Again, we're looking at key levels where price had a strong reaction from, right? So from both of these points, price saw a strong reaction down, right? A strong reaction down. That tells me that there is selling pressure at these levels. So we didn't fully reach this level right here, but we did in fact have a swing failure of this candlestick high. So again, you'd enter a short position, go down to a lower time frame for entry, right? Using those easy algo buy and sell signals. Looking at the oscillator, you can see that we had a bearish divergence confirm as well. So that would be your basis for entry in this case, followed by an easy algo sell signal, and then price drops. All right, right here, we did have a swing failure. However, this probably would have been a stop out trade, but that's okay because the risk to reward is so high that a little stop out is not really a big deal. All right, even though our bias is short, you can still catch long positions as well using this, right? I don't recommend this, but once you get the hang of the strategy, you can also look for long positions, right? We saw we had a swing failure pattern of this swing low right here, right? Price comes down, grabs that liquidity. We're seeing bullish divergences on the easy oscillator. So you'd enter your long position and target these highs. So that's a swing failure pattern strategy in a nutshell. Like I said, this is one of my favorite strategies and is definitely one of the most profitable. If you guys have enjoyed this video, please be sure to leave a like, subscribe to the channel for more trading content down below, and get yourself easy algo if you haven't already. Our indicators add a ton of confluence to your trading and will help you navigate the markets a lot easier than without them. But that's it for me. I'll see you guys next video.